Welcome. I'm Coach Hill with QD Learning, and today I'm going to be going through the LD topic that was released just a couple of days ago, which has to do with instituting a national wealth tax. Now, for the sake of this video, I'm going to stay off the video because I've got a lot of information to show you in the slides, beginning with this. The United States. Just want to make sure that this is the United States doing this, not an outside organization that is imposing fees or penalties or an outside adjudication, nothing like that. We're talking specifically about the United States, not corporations. Next up is ought. Ought, of course, will be decided through framework or criteria, and we're going to get heavy into that because this topic calls for it. Next up comes adopt. Does adopt mean passing a law? Does adopt means that the law has to be passed and it has to be physically done in order to count it as being adopted? Where that bright line is going to be debatable and through topicality. Next is wealth. When we're talking wealth, are we talking cash? Are we talking property? Are we talking debt? We need to specifically examine what the wealth is that we are talking about. Remember, wealth doesn't just come with money. Wealth also comes with power and influence. And of course, tax. Tax implies something that is going to be placed on transactions or goods. So does that mean that if a wealthy person has savings where they're not really earning any income, or even if they are earning some sort of residual income through interest, is that taxable? And is that what we're talking about? Or are we talking about everything they touch or own or is in their name, or more importantly, their corporation's name? Because when we talk about the wealthy in the United States, we're not talking about the people that you see walking around that are celebrities and have planes and cars. We're talking about people who have old money, who have traditional wealth that consists of their power and their influence, not just what they happen to have in their bank account. So let's be clear on our definition of who are the wealthy and what exactly wealth is. That being said, let's get into some framework debate. I'm going to give you several criteria that I would consider running if this was my team or I was the person doing debate. All right, let's begin with utilitarianism. The idea that on utilitarian grounds, a tax would be good because it would redistribute the wealth and we would all be happy and together. The con argument here would be that there would be less wealth being generated because we wouldn't need to. Next is justice and fairness. Now, we all heard there's nothing fair in life, but according to John Rawls, fair society should redistribute resources so everybody's got a fair shot. However, the con argument would be that this attitude punishes the success and violates the principles of fairness. If I go out and work hard for my money, why do you get to sit back and eat my pork chop? That's not going to work. Next up is libertarianism, the idea that movements such as this or ideas such as this are going to infringe on my individual property rights. Although others would argue, even those that are libertarians still require the government to come in and handle social services, cleaning streets, hospitals, those sorts of things. So in the end, libertarians would end up going for something that helps them in the long run rather than their individual rights would help them in the short term. Meritocracy is the idea that wealth is earned through talent, hard work, and innovation. And we all would like to believe that. But the reality is probably closer to wealth is inherited or accumulated through systems that inherently favor the wealthy. Egalitarianism, the idea that we should seek to create a society with greater equality, everyone on the same level. However, the con argument is that this could suppress individuality and innovation. Why do I need to work hard if I'm just going to be at the same level as everyone else? So I'm just going to chill and do nothing and earn my money. Social contract theory states that individuals agree to do things for the mutual benefit of society. Others would argue that a consumption-based tax would be a better way to do that. That way, if a person wants more, they pay more. But a person who just happens to have more isn't necessarily taxed more than anyone else. Now we go to Aristotle for the idea of virtue ethics. Aristotle's argument being that the wealthy have a moral obligation to help those that are not wealthy, whereas the con argument is virtue should be a matter of personal choice. If I feel like helping the poor, I'll go do that. If not, I'm going to go buy a Cybertruck. Consequentialism simply looks at the results. What will be the consequences of a wealth tax? Will it help people? It might in the short term, but in the long run, it could cause all kinds of problems that we're going to talk about in the disad section. We would look at the consequences of doing this before we made the decision whether or not we should do it or not. Communitarianism, the idea that individuals have obligations to the community that they are a part of. However, the opposite would say we have a right to prioritize our own interests for our family over that of the collective good. Economic justice, the idea that we can reduce some of the harshness that's present in society by sort of economically leveling the playing field. Where others would argue that, hey, we all have an equal opportunity, you deal with the cards you're dealt. The argument in this case is basically that doing this particular type of law would allow for a more equalization in society, especially when it comes to race. Because I don't think it's a coincidence that the wealthiest people in our country happen to be those who are not people of color, whereas those who are people of color disproportionately lack wealth and access to social resources. There's also the idea of generational wealth, that we're a democracy. We're not like the kings and queens of England where the wealth just gets passed down and no one ever has a chance to break into the wealthy or the rich or the elite. We want to do away with that. Next would be tax evasion and loopholes. The idea that the system is set up to equally balance economics, but because the wealthy have so much influence and are able to hire lawyers and accountants and tax people who can find the loopholes, that in the end they end up coming out on top, whereas the normal person gets hit with these taxes and never gets to take advantage of these loopholes because we cannot afford representation and we simply do not know enough about how big money works. Next comes social trust and cohesion. The idea that if we start taking people's money in order to level the playing field, those people, i.e. the rich, are not going to be happy and they're going to backlash and cause all kinds of social problems later. And I'll talk about that in the disad section. Next comes philanthropy and charitable giving. That instead of necessarily making the wealth just pay taxes, what we call their fair share, we take that money and we can put it towards charitable donation, making sure that that money is used for society, and maybe rich people will feel better seeing that they've helped a certain portion of the population. We definitely have economic classes here in the United States, and perhaps we can do away with that classism if we were to get people to pay more wealth tax and sort of even the playing field. Housing affordability. This is huge considering that Kamala Harris and the Democrats are running on the idea of building more houses for the poor and allowing actual gifts to these people. I believe it was several $1,000s she's going to give each person buying a new home for the first time. This is going to create some issues. We already know that people who do not own houses are considered in a lower class system than people that do. So maybe by allowing for houses to happen and using that as sort of a tax on the poor where they have to pay more money for bigger houses, it might equal that playing field and allow us to do some good when it comes to housing in our society. Next comes political influence of the wealthy. As I mentioned several times, wealth isn't just about money, it's about political influence. When you think of things like political PACs or donations or lobbying, these are ways in which the rich not only stay rich, but they remain in power and they remain with that influence. So if we were to break down those structures and have it sort of a social tax, meaning that we tax the influence structure, perhaps we could get some benefits, and it would be a clever way to avoid certain disadvantages. Next comes corporate social responsibility. You're going to have to win the argument that it is rich people who own and run corporations and that they are using the corporations as a proxy for their own wealth and power. Once you win that argument, then you can run cases all day talking about corporate responsibility. But on the other side, if they argue that, well, corporations are owned by the employees through shareholding and that the shareholders aren't necessarily rich people and that it would penalize people and keep them from having the opportunity to own part of the company in which they work for, those are some pretty good arguments against the whole corporate social responsibility thing. We'll see. Now let's talk disads. In the disad space, we have, first of all, capital flight. The idea that if we start taxing the rich, they're going to pick up their companies, their money, their property, and they're simply going to go someplace else. Asset restructuring. Businesses through corporations are very clever. They know how to tear down their corporate structure and rebuild it overseas or someplace else where they will be able to take advantage of tax savings and not be taxed, even with new taxes that are being pushed by the affirmative. This reduces taxable wealth available for the government to level and makes enforcement more complicated. Keep in mind that the idea of putting a new tax on isn't just simple, and it isn't going to make people just readily pay. You're going to have to get someone to go out and enforce this and collect those taxes, and you're going to have to establish penalties and punishments for people who refuse to pay or who dodge. A few more. Court clog. As I mentioned before, wealthy people can afford attorneys. And given that they can afford attorneys, they can fight in court for years before having to pay anything. In fact, you've heard many times about corporations who would rather pay the fine and just be done with it because they still make so much money doing the illegal act that the fine is just a pittance compared to the profit they make. We can see a lot more of that happening. Political hijacking. Because wealthy people have such incredible power and influence, especially in the American government system through lobbying and corporate representation, they can simply get angry and say, you know what? We're not going to pass this bill, or we're not going to participate, or we're going to influence things that are going to be against whoever is voting for this tax. So it's not just a matter of putting it out there. There's going to be attitudinal barriers where people will definitely influence government members through corporate cash and other ways not to support such a bill. So getting it passed is going to be difficult. Intergenerational wealth transfers, transferring money to my son or daughter. If I know there's going to be a tax, I will do that immediately and hide all my assets among family members. So when you look on the bank account on the paper, I'm poor. My corporation has things, but as an individual, I'm poor. So you can't tax me with this new tax. Next comes the reduction in economic risk taking. If you're going to tax me for taking risk on new technology, I'm not going to do it. If you're going to tax me for forming new businesses with new innovations and pushing new jobs, I'm not going to do it. Why should I pay extra to pay other people? I got in the business to make money for me and mine. Now you're forcing me to work for someone else? That's not how the game is played for me, the wealthy person. Job reductions. If you tax me, I will get rid of my staff. If I have several companies or a big company, that's going to hurt the U.S. economy. But I am not going to pay my workers more when you are asking me to pay more taxes. That's just not fair to me. I'm not going to do it. Price increases. If I do end up having to pay more taxes, I am going to pass that tax loss on to the people that buy from me. And if I happen to be a company or a wealthy person in charge of a company that has sort of a monopoly on things like Intel, Nvidia, and AMD, then I'm going to make my prices exceptionally high so that people will pressure the government and get rid of this tax that you want to put on. If I do end up in a situation where I have to pay more taxes because I'm wealthy and I happen to have a corporation, well, then I'm going to do stock buybacks and dividend payouts. This is going to reduce the amount of capital available for me to expand. My stockholders will be happy I'm paying them, but I'm not going to be able to pay for that new equipment or innovation. Why would I want to if I'm just going to get taxed more? Focus on efficiency and automation. If I have to pay more, I have to find ways to do things cheaper. So I'm going to get rid of all the people and bring in AI because AI does not have all of the taxes and all of the problems associated with dealing with human capital. This topic is not going to come down to nuclear war and other countries. This is going to come down mostly to philosophical beliefs regarding money and regarding wealth. Keep in mind that the wealth structure in the United States isn't really built on wealth, it's built on debt. That being the case, you're going to want to look at things like debt restructuring and other areas in which a person can argue that wealth doesn't exist, it's all debt, and therefore we need to redistribute the debt better to have a better, more balanced society. I don't know. It's going to be an interesting topic. I'm Coach Hill with QD Learning. If you'd like to know more, or you'd like some advice or some help, or you have questions, or you just want to chat and give me your opinion on the topic, let me know down below in the comments. We don't get enough comments here. If you'd like me to continue talking about different resolutional analysis and different resolutions and ideas, let me know in the comments. Please like and subscribe. Once again, I'm Coach Hill with QD Learning. Good luck this semester. I'll see you soon.